Casey Baugh.
How you doing?
Welcome to the show.
Yeah, long time coming.
I know. Here we are. I've heard about you for years. You got to hear
same.
about, everyone's like, you got to talk to this Casey Baugh guy. This guy's amazing. I'm like, anyway, it's been fun to try to pin you down.
Yeah, no doubt. I'm super excited to be here.
So you're, just for people that aren't unaware of you, give us like the 30-second overview of all the funds and businesses you guys run and invest into. I know you do a ton. So give everyone you kind of give me a second.
I'm a professional investor, both with my personal capital, and then I'm a partner at a company called Sandlot that we're a private investment company. So we've done, just over 500 million of deployed equity over the last couple of years over a lot of different asset classes, kind of a general investment company. So we've done oil and gas, we've done real estate, we've done private equity, and that's what we do. Yeah,
it's cool to see. I've seen you guys have had your hands in a lot of deals that I've heard about and seen. It's always like, oh, Sandlot guys or Casey's getting into these deals. I keep hearing about you guys. It's just so cool. So I want to actually go back a little bit with your investor pool.
Yep.
You guys have, at least in my opinion, an incredible, you guys are a relatively new investment firm.
Yeah.
A couple years old. Some of you guys are 30 or 40 years old. You guys are relatively new compared to some of these old money, whatever.
Yep.
You've been able to raise money very quickly. You said oversubscribed on every deal you've ever done.
Yeah.
Walk us through, for somebody watching this show that's maybe starting a fund or wants to get in this game, like what would be some advice you'd give to them to get that kind of level of trust, confidence, oversubscriptions to all these different types of deals?
Ours, it's most of ours is 20 years of developing relationships that end up, you get into a business where that matters, but so many of ours were relationships we've had for a long time. And for me specifically, I worked at Vivint for 15 years. And so I was able to work with and manage over 100,000 reps that went and, they're either doing it for 1 summer, 3 summers, or 5 summers, but these same people, now they're founders of companies that have exited. They, did investment banking, they're dentists, they're doctors. And so you just have, a lot of my network comes from that world of just working with a lot of people and trying to be good human. And,
I was going to say that speaks volumes to you. Because if you say, well, it's just been 20 years of just me living life and doing business, and now 20 years later, everyone wants to invest with me, that says a lot about you.
Well, and
you probably won't say that about yourself, but it does.
And to take a step back, if you have a great deal and tell the story properly, the deal will take care of itself. People are very smart, and money will find great deals. And so for us, if we underwrite great deals and you just tell the story properly, the deal will get raised because people are really smart, and when they can easily understand value, they write a check.
Yeah.
And that's been my, our experience. And Dave, who my partner, he has phenomenal track record as well. His pedigree is kind of the opposite of mine. He lived in New York and, did finance his whole career.
Has the traditional background.
Did an MBA at BYU and kind of has a much more traditional background, where mine's more entrepreneurial, more operator than Dave's.
Shifted gears. We've got an interesting economy right now, interesting market to raise capital in.
Yep.
What have you seen, 2 years ago? I'd say it's a lot easier to raise capital. Market's raging. Everything's going crazy right now. Seems a little bit different. People are a lot more scarce. They're doing a lot more due diligence on raising capital, which is fine for good managers. What have you guys seen as differences when you're approaching capital raising now versus maybe 2 years ago?
I think it's really good. I think there's a lot of terrible funds. I think there's a lot of terrible theses. I think
the tide's going out. People
tremendous amount of speculation over the last couple of years, even from like some of the best firms in the world. You look at some of these really big the Tiger Globals.
I was going to say Tiger. That was the number one.
As much money as you can possibly deploy they set the peak of the market. They bump the peak of the market. You take all the money that's been lost in crypto, just like it's billions, hundreds of billions of dollars just evaporated because, the over speculation. And so for us, the way that we think about, it's more like simple thought. It's the Warren Buffett, you figure out who's swimming naked when the tide goes out. And it's, rule number 1, don't lose money. Rule number 2, follow rule number 1.
Yeah. Yep.
And so because we raise money from a lot of investors, and it's RIAs, it's family offices, it's, high net worths. We just are ultra conservative. And so we gravitate towards hard assets. We gravitate towards private equity that's more late stage, growth equity, preferred securities in place, really, hyper aware of downside risk.
Yeah, that makes sense.
And then for us, we also like my background is knocking doors. My entire career was made 2009, 10, 11, and 12. When it was, the economy was terrible, gas prices are up, everybody,
no one's got money.
Unemployment's crazy, everybody's losing their homes, and we have to knock a door and have somebody pass credit. And so arguably like the worst time you could ever knock doors, and it was the best years that we ever had. And what we found is we just had to work harder. In a good market where anybody will give you money, in a tougher market, you've got to go be better. You've got to do better deals, and you've got to talk to more people. And so we feel in a down market, it's our competitive advantage because we're scrappy. And so we're just willing to just get out and, meet more people and do more work and, take more rejection. I think a lot of people have an aversion to no. They have they're scared of somebody to tell them no. And, that's kind of got beat out of me over the years. It doesn't bother me at all anymore, where it did when I was younger. You feel like when somebody's saying no to you, they're saying no to you, and they're not. They're saying no to your offering or no to that point in their life.
Well, it's funny. It's just like knocking doors. You get tons of no's. Today, raising capital, you get tons of no's.
Yeah.
And it's even from successful, smart people that are telling you no.
100%.
It almost hurts a little in a different way. You're like, oh man, if that guy doesn't believe in me, then.
Nope.
Anyways, it's interesting, and that's beaten out of you, which is so good for raising capital in a time like this.
And like the reality is, we partner with just exceptional partners. Which make it way easier to knock doors or way easier to raise capital. Like we're doing a deal right now. It's a project with this group called Colmena, but it's a family office, I
was on the phone with them last night, actually.
Billion dollar family office. The son's like the smartest real estate person I've ever met ever. He's a partner with us on our manufactured housing, and you put him in front of a room and everybody's going to be impressed. And so we just try to like facilitate a room where people don't need to talk to us. They just talk to the person who's doing the work. And you know what I mean? And it's the same with when we underwrite a deal, it's like, if we have that much conviction on the deal, let's bring the founder to the people and let them hear the story straight from the founder's mouth. And you hear a different passion, you hear a different energy, you hear a different conviction from the person that's actually in the arena that's doing the work. So
a lot of you guys are you guys finding good operators then?
We just can't do a deal unless we have exceptional operator. We're not fixing anything. We're not like, we're not looking for value of broken stuff that we're going to go fix. We're looking for stuff that's working great. And we just try to network our way into a deal that we shouldn't have access to. And I think that's our competitive advantage is we pride ourselves in having great relationships with people, and we've got a great community, and we try to add a ton of value to where people want to partner with us for a long time.
I love it. So you'll find, and it sounds like you guys have done deals, across the board.
Yeah.
Real estate, late stage private equity, you guys have done it's not like you have a one focus thesis. It seems more like your thesis is we find great deals with great founders.
The common thesis is we have to have exceptional founders with great track records, with great companies, with great unit economics. And so, that excludes, we get hit daily, multiple times a day about opportunities. And 99% of them just don't fit our box. And so we would prefer to have less partners and go way deeper with those partners than have a lot of small partners.
Gotcha, that makes sense.
And most of it comes down to risk. It just comes down to, if you deploy capital, you are risking capital. You have to take risk. But the key is to take the right type of risk, to take asymmetric risk, take risk that you have as close to,
little risk
negligible,
for return,
for as big a return, and when something, and you don't need to do every deal.
For people that don't know, asymmetric risk too, you hear high risk, high reward, low risk, low reward. Asymmetric risk is low risk, high reward.
Low risk with the highest reward. Which
yeah.
for us, that excludes the 100x returns. We're not looking to go, lose on 9 out of 10 deals, but hit 1,000x on one deal.
Yeah.
I invest in those funds. It's not that there's not a place for seed capital or venture capital, these funds. It's just not what we do.
Yeah.
And so I think a big key is to know what you do and what you don't do, what you say yes to and what you don't say yes to. And, so we're a generalist for sure, but our kind of core values are long-term. So compounding is everything. So we're not looking to get in, get out. We're looking to be in stuff for a long time. Don't lose money, take asymmetric risk, tax efficiency, and diversification. And so that actually, like, when we're in oil and gas, it has a lot to do with great operator, diversification over a lot of wells, and great tax incentives.
Yeah, the taxes are huge on those.
Yep, and so that tax is what took us there. We're not oil and gas experts. So you have to go, one, get smart, and then two, partner with people that have spent their whole life doing it.
Final question. I love to leave people with this. Open mic. Okay, I haven't prepped for this question, so I'm just putting you on the spot.
Yep.
You got an open mic. You got like a minute and a half. If you could leave the world, if maybe you're dying tomorrow, whatever. If you could leave the world, it's your last podcast ever. You had to leave the world with a minute or a minute and a half from Casey Baugh.
Yep.
Before you died, what would be the most important thing? And by the way, you can talk religion, politics, family.
I actually think
about
about this more than I should think about it. Like I went to a funeral this week, and it was a gentleman that was in my old neighborhood, and he lived like this beautiful life. He was, a military veteran, went and got his MBA, had a great business career, retired, wealthy.
Yeah.
Served for 20 years. We'd see him every day walking, him and his wife, super happy. And he passed, pretty quietly. He got cancer. They didn't tell anybody about it, and he ended up going pretty quick. And so I go to his funeral, and, he's lived his life. But then you go to these people like Kobe, and you go to these younger people that pass away. That there's, more and more people that are my age that are passing, where you start thinking like, man, I got to be, if I've got like a song to sing, I need to sing it. Like if I've got stuff I want to go do, I need to do it. And so, if I had like, open mic and I was saying, hey, like what is life all about? The secret to living is giving, for sure. And that we grow so that we have more to give. And that if you can build a habit or a ritual in your life on a daily basis to give, it will change your life. And so I had a mentor, a guy named Todd Peterson. He's CEO of Vivint. He's, it was a gift in my life to be a 24-year-old kid and have that be the CEO. Because all those categories that we talked about earlier, the mental, the physical, the business, the investments, the relationship with your wife, the relationship with God, he just lived those in such a meaningful way. But one of the things he did is he would always have cash, like actual physical cash on him, and he would give it away. For as long as I've known him, for 15 years. And I always thought it was so cool. And so I would like say, hey, this trip, I'm going to go give $100 to somebody, or I'm going to do this. Yeah. In the last couple of years, I've had a habit where I'll go to the bank and I'll get $10,000, put it in a bag, and I look for opportunities on a daily basis to just give. And it, like DoorDash is the lowest hanging fruit, because when someone comes to your house, most of the time it's a female, or it's a minority, or it's somebody that's hustling. It's somebody that's working late on a Friday night or working on a holiday because they need to make money.
Yeah, they need it.
And so I just have these experiences where, and at this point it's, hundreds, if not thousands, but it was Christmas Eve, and I've got this guy that, we do DoorDash. Guy shows up to my house, and I'm looking for my bag to go get some cash, and he's walking out, and I'm like, hey, can you stop? And this guy turns around, and you can just see physically that he's lived a tough life. He's got a face tattoo, and his countenance is just like more wanting to fight me than come say hi to me.
Interesting, yeah.
And I'm like, hey, come here real quick. And I just go to him, give him a couple $100, and I said, hey, I just want to acknowledge you. Like, it's Christmas Eve, and you're out hustling, and I just wanted to tell you thanks for, coming and, dropping this off for my family. And this guy breaks. And you take this guy that he's just like so hardened, and he just gives me this big hug, and I don't know kind of this guy. Don't know what happened with him. All I know was that moment, he needed that moment and I needed that moment. And, I get to take it with me, and I get to take it with me kind of on a daily basis. And it's changed my life. I live so much more abundantly. And this is the one that I don't get. I don't understand how this principle works in life. But when you're abundant, you receive abundantly. And I can't physically understand it, but my personal net worth has multiplied kind of exponentially since I've started this habit, but I'm giving the money away.
Yeah.
And so there's something in the universe, or there's something bigger, where when you give, it just comes back to you in more abundance. And I've seen this, the people that I look up to the most and the people that I respect the most are also the most generous, but they also receive the most abundance. So that, if you were saying, hey, you've got one message to share, what I would say is the secret to living is giving, that business is a spiritual game, and that the whole point to all of it, the whole reason that we grow and that we scrap and that we hustle, is so that we have a bigger platform to give. So that's it.
Wow. It's amazing, Casey.
Yeah.
Funny enough, I heard a similar story from Todd Peterson about the money.
Yeah.
I started doing that about 2 years ago.
Life changing.
It was amazing. And me and my wife, I just said, we got 20s or 50s or 100s. We'd always take it with us.
Yep.
And it was just, and I read a book called The Go Giver.
Yeah.
Talks about the mentality, because it's one thing to like write a big check at the end of the year, which is good to do, but it's really fun to have a mentality of I'm always looking for someone to like.
But
bless.
I think it's a step further. I think like you take this behavioral economics principle of like, if you were to eat 6 apples in a day, or you eat 1 apple for 6 days, like the satisfaction that you get out of those 6 apples is significantly different. 1 a day for 6 days than 6 all at once. Yeah. And so there's something about like this dopamine hit or this endorphin of having a mentality that I want to like, we have this reticular activating system where so much of our life is filtering what, if we like took in everything, we'd go crazy.
Yeah.
Because you have sights and sounds and noises and everything. So we're built to kind of filter, but where focus goes, energy flows, and what we focus on, that's what we see in the world. And so when you have eyes to go see people in need, they're all around you, and you'll see opportunities to serve. And when you don't, you won't see them because you're focused on other things. And so that one habit and that one model of how to do it literally changed my life. And to this day, it's something that it's special. And me and my wife will share stories of, when it was her. One more story and then we'll finish up. But
I keep going. I love it.
No, I'm at my house, and we were trying to have kids, couldn't have kids. We had 3 girls, and we tried all of the fertility stuff. And
so 3 adopted girls.
No, we had 3 of our own.
Oh, 3 of your own.
And then it just stopped. Yeah, it just stopped. And so anyway, we went through all the fertility stuff, didn't work out, and so we were kind of like, hey, we're done. So we're like, my wife's like, I want a dog. We already had 1 dog, so we're getting another dog. So I'm like, all right. So we look up these dogs, and she, decides on like these golden doodles. And they're like $4,000 dogs. They're super expensive.
The golden doodle is like the premier, most expensive. Yeah.
And there's like a particular company. It's a local company. It's called Rocky Mountain Golden Doodles. And so she finds this company, And whoever runs that company is just brilliant because they're like, oh, you want a dog? Let me bring all 8 over to your house and your kids can play with them and then you pick out the dog. And so I come home from work and my kids and my wife, there's 8 little puppies running around.
Sold,
and I'm just like, it's not like, are you going to get a dog? It's which dog are you going to get?
And how many,
which is so great. And so anyway, DoorDash shows up and this girl hops out of the car, probably 18 years old, doesn't speak very good English, and she lights up at these dogs. And she sees the owner and says, "You're from Rocky Mountain Golden Doodle, right?" And she's like, I put in for your drawing, and that the owner was trying to build their Instagram following. So they did a drawing for a free dog if you,
cool.
You know. And so anyway, I'm seeing this happen, and in my head it goes, you should get her a dog. And I'm having this, I'm like, I'm not buying the DoorDash girl a $4,000 dog. Like, I'm just not. And then like, same thing, you know, get her a dog. And so I'm like, do you want a dog? And she's like, yeah. And I didn't fully go. I was, then I'm like, yeah, go snag one. And she just lost it. You know, she goes, picks out a dog. The next day, her and her mom come over to my house, like make us a cake.
Oh, wow, yeah.
And we have like this special little, and I don't remember the money. But that experience like is magic. Yeah. But it was a test of abundance. It was a test of like, are you really going to do this or you're not going to, you know, and it's harder when it's like, well, what I've learned is if you wouldn't give $1 out of 10, you'll never give 100 million out of 1 billion. If you don't do it when it's small, you'll never do it when it's big. And people think the opposite. They think,
it's the best principle I've ever heard in my life.
When I get it, then I'll be generous. And it's not the case. You're generous and then you get it, and it's not the other way around.
There's actually studies that have been done. There's a professor out of Clemson that does a whole study on that principle. Yep. She was trying to figure out why people that are wealthy they gave a lot when they were wealthy, but also had a history of giving when they were poor. Yeah. And she did this whole thing, and she's like, I don't know why. She kept going back like, we don't know why people who give when they're poor end up making more and more, and then they give more, and they.
My core tells me it's that you live abundantly, and when you live abundantly, you receive abundantly, and when you live in scarcity, that's the energy that you put out to the world, and people get scarce. I think when you're abundant, you attract just abundance in your life. And that's been my experience. And it's been my experience with the mentors and the people that I look up to the most. Yeah. The people that are the most successful are also the most generous. And I you know, when you're saying, hey, who are you? That's who I aspire to be, is that person.
Cool. Oh, I love it. Casey Baugh, everybody. Thank you so much for coming on.
Yeah, thanks so much for having me.
Best way to contact you, find you, learn about you, follow you online, anywhere? Or learn about your group as well?
I mean, Sandlot Partners, we have an email, so you can go there, but we're pretty low key. I mean, we're not out there. So you kind of have to work.
You have to work a little bit to get in. Yeah. But Casey Baugh, we'll tag you online or whatever. Right. And then Sandlot Partners, sandlotpartners.com. Does that work? Okay. Yep. Sandlotpartners.com.
Yeah, thank you.
Casey, thank you so much.
Fun hanging.
Yeah, it's fun hanging out.
Thanks, guys. Appreciate it.